make sure when you start looking at the insurance required by the motor carrier, that your business doesn't go out of existence just because you've terminated a contract, either through you terminating it or the owner or the motor carrier terminating your owner operator contract. And you want to make sure that it's transportable so that you can make your next business decision and still have your insurance intact.
Mm-hmm.
The last thing that you need to do, and of course, Charlie and I have talked about this over the last couple of weeks, just on accounts that we know where a contract is terminated and then the guys out there with no insurance can't even drive home. Or they pull you out of the truck, repossess the truck, and there you sit with, again, no way home. So those are the things that we look at. We want to make sure your business is protected. We want to make sure that your business is acknowledged other than just the name of the driver.
Right. Mm-hmm.
And as we go through these coverages, we'll start with whatever you guys want to talk about first, but we want to make sure that you understand that when the insurance is issued to the motor carrier, your termination by either party, your insurance goes away. And in some cases, it goes away because your lease has been terminated. So we want to talk about things that you can do if that happens to get around so that you can move your truck and get home.
Right. And that's what I wanted to touch on, Tony, because you and I had a discussion about this today.
Yes.
Let's say that you're at Swift, Schneider, JB Hunt, whatever. You decide, because you have a plan, you have a business plan that says it's time for me to go to Landstar. And let's just take the Swift lease as the example, since that's most of our audience here. Let's just pretend, folks, you have the money to port your lease out, which means you're putting a sizable amount of money down so that you can take that truck to another carrier. But what happens, Tony, and correct me if I'm wrong, because you know I'm still fuzzy on a lot of this, I terminate my contract at Swift. I have arranged to pay the truck off however I do that so that I can take it to Landstar. But as soon as I terminate that contract at Swift, if I have Swift insurance, my insurance is gone. So how do I move the truck? Right?
Well, yeah. So that's exactly what would happen. Swift would tell you that your insurance is null and void, so you have no auto liability, which means you can't drive across the street. You have no coverage for your physical damage. You have no coverage for your non-trucking because that's tied to the lease. When the lease is terminated by either party, that coverage vanishes just by design.
Mm-hmm.
And your occupational accident, because it's issued to Swift, if you're on their corporate plan, that also vanishes and you're no longer in the trucking business. So you can't move your truck. And it's a huge problem because turnover, I mean, if turnover is anywhere close to what you read at 50%, 60%, 40%, it's still a large number of trucks every day that contracts come and go. And you need to be able to move that truck. You can't get caught. You can't show them your old ID, because if you get in a claim, you will have known that you have no coverage. Swift will make you very aware of it, and they should. So what you're looking for then is to protect your business. So that corporate model only really is designed to take care of it while you're in agreement. It's when you're in a disagreement and terminated, you're on your own, and now your entire business model is put on hold because you have no insurance to operate.
Right.
So two things can happen. You start with the truck. Your truck could be repossessed because part of the agreement is you keep insurance on it, right?
Right.
So you need to keep the physical damage. You need to go to the marketplace and get physical damage on a typical lease. You also will have to go buy an auto liability policy because your non-trucking, which allows you to move through non-trucking arrangements, would be gone because the lease is broken. And auto liability becomes very, very expensive. You can go out to a whole show on its own, going out on your own and buying your own auto liability. So
Right.
what you can do when you go to the private sector where you bring your insurance to them, first of all, the insurance doesn't terminate. Your OCAC stays intact. Your non-trucking goes away just like anybody else because you don't have a lease agreement, except we can give you an unladen liability, and it's a temporary move policy that you would pay for to move your truck. Can't haul freight with it, but it will allow you to get home, right? So if the motor carrier can test, some motor carriers will let you get home. I mean, that's a great move if they do that. And I think they should, but there will be those instances where that's not true. However, so you can buy an unladen. You can buy a 3-day policy to get you home, a 5-day policy, a 7-day policy to get you home. Once you get home, get your bearings straight, start making arrangements, find a motor carrier you want to move to, call us back up, activate that policy, and get you down to the motor carrier for your inspection, your interview, to go through your background, and get you leased onto a new motor carrier, at which time they will offer you a corporate insurance program. You should compare the two to the private that you hold, and you take the better coverages. And the bigger you are, most of the time, the lower the rate. It's the law of large numbers, right? But when you go that corporate route, your insurance, if something goes awry, you're back to finding no insurance again, and you're out looking for it. So if you control it at all times, then you get to control your decisions like a business.
Right.
It
really is the
goal.